NIO versus Xpeng versus Li Auto stock comparison. Welcome to the video, guys. So just to kind of follow up from my previous video, I talked about charge point versus blink charging. We're going to compare the three most popular Chinese auto EV stocks right here in this video. So let's get right into it. So what we're looking at here, we're looking at TradingView. So we have three stocks on here. So as you can see here, the first stock at $53, that is Xpeng. The second stock at $49 is NIO, and the cheaper stock at $38 is Li Auto. So kind of give you guys a bird's eye view of what's been going on. As you can see here, NIO is the stock that has already been IPO'd for a while. It actually IPO'd a year or two ago. So that stock had been trading really cheap, and that's when I was publishing videos about NIO earlier in the year, guys, telling you guys that this was a good opportunity and a good stock. So kudos for you guys that were subscribed to my channel and you saw those videos. But I made the mistake of selling NIO too early, and I only made some small gains on it. I was a little bit impatient and I wanted to move into some other stocks. So that was probably one of my biggest regrets. But the stock is up a ton this year. So as you can see here, it's up over 1,500%. So NIO has just absolutely crushed it, and it's by far the most popular Chinese auto stock. Now, the other two stocks recently IPO'd, so they don't have a lot of trading history, and they're up respectively. Xpeng is up 153% year to date, and Li Auto is up 131% year to date. So now what I'm going to do in this video is we're going to just basically break them down. I made another spreadsheet with all the numbers and delivery numbers, revenue numbers, number of charging stations, market cap, everything, to kind of give you guys a comparison so you can see which stock you want to invest in more so, and to also give you guys a kind of apples to apples comparison, because sometimes when people are talking about these companies, it's hard to kind of understand exactly what's going on here. So let's take a look at that spreadsheet. So okay, so here we are on the spreadsheet. So like I said, I just made a simple spreadsheet on Google Sheets, guys. It's free to use. You can do this yourself, and it just kind of helped me visualize everything. So starting things off, we're looking at the market cap. So I'm recording this video. As of recording this video, NIO is at a market cap of 67 billion. Xpeng is 39 billion, and Li Auto is 31 billion. So guys, these are three market caps. Just kind of looking quickly, it would appear that NIO is by far the strongest competitor, and of course, as you can see here, if you guys are already looking down at those revenue numbers, they're making the most money. So me personally, I think NIO, obviously, once again, as I mentioned in the previous video, I'm a big proponent of just going with the biggest player in the market. So I mentioned talking about, if you're going to buy tech stocks, you know, go with Apple. If you're going to buy streaming, go with Netflix. If you're going to buy, you know, e-commerce, you go with Amazon. And the reason is that is usually the biggest market player is bigger for a reason. So if we take a look at this market cap, we see at 67 billion. Okay, so Tesla stock is trading at around a market cap of like 460 billion. Now I expect Tesla obviously to go up a lot more once they be included in the S&P 500. So NIO is by far, it's still quite smaller than the largest EV stock in the world, which is Tesla, but NIO is also in the Chinese market, and the Chinese market is the largest market. So I think NIO has a very interesting strategy. They're a lot different than Xpeng and Li Auto. They have many differences. So I want to talk a little bit more about those differences, and then I want to get more into those delivery and those revenue numbers. So I found a really interesting article on Forbes. It does a really good job of kind of breaking them down to give you guys an overview. So NIO, which was founded in 2014, they have three different SUVs, the ES8, the ES6, and the E36, and they're all priced at about $50,000 US. So basically what makes NIO a little bit different is they have something called battery as a service, or battery swapping, which allows basically customers to subscribe to batteries instead of buying them, and then they can actually exchange these batteries. So once the battery is depleted, they can actually go to one of many of NIO's charging stations and exchange the battery and things like that, or they can just simply lease it. So NIO's a little bit different. They're more so of kind of trying to build like a subscriber-based type business model. They're not really interested in just one-off selling cars, and they even have something called a NIO Car Owners Club where people can sit down and network with other people and hang out. They even have a play area. So NIO is trying to build like a cult-like company, similar to probably like Tesla or Apple or something like that. So that's one of the reasons why I think it's one of the strongest players. Now, Xpeng, the second stock, Xpeng's at a $39 billion market cap. And I like Xpeng. I think Xpeng has a lot of room to grow. I was looking at a lot of videos on YouTube, and I was looking at this guy. He had been living in China for over 10 years, and he reviews EVs for a living. I forget his name, but basically he said that driving the Xpeng, it was like driving a Mercedes Benz. So I think Xpeng would be considered one of the more luxury car companies in China. As you can see here, they sell basically the G3 SUV and the P7 sedan. So he said that the P7 sedan was one of the probably the best overall Chinese EV car, and it's very similar, very similar to Tesla's Model 3, and it's much cheaper as well. So Xpeng has some of the cheaper cars out there, and they also as well has charging stations too. As you can see here, they have over 135 charging stations. And then the third company is Li Auto. It's a much smaller one. They're really actually a lot different. They're not really by kind of, circumstance, a pure EV company. They sell extended range vehicles, which means that the EVs have a small gasoline engine that can generate additional electric power for the battery. So apparently this reduces the need for EV. And apparently it's one of the top selling SUVs in the new energy vehicle segment in September 2020. And but it's not really a pure EV stock. So because it's more of like a hybrid company. So that's I think that's one of the reasons why it's also at a much smaller market cap. I think there's just less interest. So now let's move into the 2020 deliveries. So by far, so far, I went through the numbers and seen which company has delivered the most vehicles. So, okay guys, so let's now move into the deliveries. So all of these delivery numbers are from Q1 2020 to Q3. So that's basically from January to September 30th. So it's not including October, November, December, and these numbers are obviously going to grow once Q4 it gets reported. So far this year to date, as of September 30th, NIO has delivered around 26,375 cars. Xpeng has delivered 17,117 cars, and Li Auto has delivered 21,852 cars. So just off the quick eyeball, it would just look like NIO, once again, larger market cap, more deliveries. Li Auto is growing. They have one of the top selling kind of hybrid vehicles, and Xpeng is kind of catching up as well. And then now looking at revenue, it's clear that NIO is the clear leader in terms of revenue. They've generated in Q3 2020, they generated 666 million. This is all in US dollars. And for Xpeng, it was 293 million, and Li Auto was 369 million. Now charging stations. Now remember I mentioned these companies as well, they also have their own charging stations. So NIO has 143 charging stations, and you can also swap batteries there and things like that. And then Xpeng has 135 charging stations. Li Auto kind of has a hybrid technology, so I couldn't find any information on if they had any charging stations or not. Please correct me guys in the comment section if I missed that, but I didn't see any, and I did a lot of searching for that. So I didn't see any charging stations for Li Auto. So now let's talk a little bit more about which stock I personally think is the best buy. So if we kind of just use the same analogy I said, kind of go with the biggest fish, or the biggest market leader, by far I'm more interested in NIO. So I'm just interested in NIO simply because there's just more deliveries, more revenue. And I think NIO is more similar to Tesla in terms of building a cult around their company. It's just a really nice product. And also the CEO, William Li of NIO, he's a young guy, he's a billionaire, he's a really smart guy. So, it's kind of like when Elon Musk back in 2010 was making these kind of grandiose claims of selling all these electric cars. You could kind of see the glimmer in his eye. He had a vision for the future, and he's very ambitious, and he was very self-confident about his ability to sell electric cars. So just remember now, when you're investing in a company, you're also putting your money in kind of the hands of that CEO. So, William Li, he's the founder of NIO. He's also the CEO as well. Founder-led companies definitely perform well. We've seen that with Netflix and Reed Hastings. We've seen that with Tesla and Elon Musk. We've seen that with Jeff Bezos and Amazon. So me personally, NIO, founder-led. Guy has, the guy's a younger guy, and he has this glimpse, this vision of the future, and he's making it happen. So me personally, I'm just more interested in NIO. It kind of just continues to check off those boxes, has more charging stations, more revenue, more deliveries, and a fantastic CEO as well. Now looking at Xpeng, I do like Xpeng also as well. I think they have a lot of potential, but looking at the market cap, I would rather invest in Neo than Xpeng, because I feel like, you know, the stock price of Xpeng is actually the highest of the three. It's actually trading higher than Neo, even though Neo has a much higher market cap, but I just think there's just more upside in Neo. So if we take a look at stocks like this, you know, we've clearly seen this type of parabolic chart before. Amazon, stocks like Amazon and Netflix and things like that. This has the same type of trajectory where we're doing thousands of % return year to date. This means that there's a lot of strong buyer interest. And that also means that, you know, the company is definitely on the eyes of institutional investors. So, you know, obviously guys like us, retail investors, we're going to buy stocks and stuff like that, but we're not really moving millions and millions of dollars. So millions and millions and in billions of dollars is moving into Neo stock. That's why this stock is going like that. Obviously guys like us are making it move too, but that's not really, it's making the biggest moves. So I would say, you know, Neo has a lot of upside left. Now they're not nearly delivering as many vehicles as Tesla, so I wouldn't expect the stock price to go all the way up to like 500 where Tesla is, because Tesla is doing 500,000 deliveries a year and Neo has only done 26,000 year to date. So I think they projected like around perhaps like 10,000 deliveries in Q4. So let's say Neo's going to have, let's be conservative and say that Neo's going to have 36,000 deliveries for 2020 and Tesla has 500,000. So just keep that in mind, that the stock prices run up a lot and that there's a lot of growth ahead, but it's nowhere near close to the kind of the footprint and the market share that Tesla has. So guys, that's what I think about these three companies. Me personally, I'm going with Neo. Neo is my favorite. Xpeng is another stock that I'm very interested in. Li Auto is a hybrid stock, and I really don't invest money in hybrid companies, but I do understand you guys. A lot of you guys see Li Auto, it's smaller. It's actually the cheaper stock. So I can understand, you know, Li Auto is the cheaper stock out of the three. If some of you guys think that it's maybe if you'll be attracted to that smaller stock price at around $38 compared to Xpeng, which is 53, or Neo, which is about 50. But for me personally, I don't want to invest in hybrid vehicles. Even though they're doing good sales and things like that, I'm more interested in 100% electric, because Li Auto has it has a small gas engine, and for me, I've just had many bad experiences with gas engine vehicles in the past. Not things like you know, anything having to do with like personal accident or stuff like that, but yeah, guys, so I'm just not investing in Li Auto simply because I don't like investing in hybrid vehicles. I believe that cars should be 100% renewable energy, electric. Personally, I just don't want to put my money in a company like Li Auto because they're selling basically hybrids. So for me, it's basically between Neo and Xpeng. So I expect these stocks to close out much higher. For me personally, I think Neo definitely is like an $80 stock. Will probably be around that price. That would put it at a much higher market cap. Neo's easily a $100 market cap company. You know, with the type of growth and with the type of price to sales ratio we see on stocks like Tesla, Neo's easily $100 billion. I'm less confident about Li Auto. I'm just not into the hybrids thing, and I think Xpeng has some potential as well. I think Xpeng will probably trade alongside Neo. So that's how I play these stocks, guys. I hope you enjoyed this video. If you want me to cover any other stocks, please leave them in the comments and I'll make sure to do a video on it if the stock gets enough thumbs up. And please smash the like button on this video if you enjoy my content. If you want to see more updates on more EV stocks and more stocks that I think are going to move much higher in the future and make you guys a lot of money, please smash the red subscribe button, guys. It really helps the channel overall, and I really thank you for the support. And like I said, if you want me to make any more videos, just let me know in the comments and I'll do my best to help you guys out. So that's it. Until next time, guys, take care.